All right, let's do this. Can somebody confirm you can hear me? Let me type in here. Give me 1 second, and then we'll start the process. All right, let's go. All right, let me get a test of YouTube, loud and clear. Perfect, perfect. Jeremy, yes. All right. So, October 1st, let's start with the daily chart. We've marked out every month range and every NFP Friday. NFP Fridays being the fixed constant for the month. Previous month 50% being more of a live variable. And we can see that we're above previous month 50%. We're above NFP Friday. We expect it in the month higher, right? Just like we do. Good morning, Ralpha. Ralpha, I think you're the one that asked yesterday what my trading strategies are. And I just want you to know that I can't talk through that, right? Like, because of the company that I work for a sell-side organization. I do not give financial advice whatsoever. I just put statistics on a chart every day. I cannot guide you into that. I cannot even anymore talk about random trades from an educational standpoint because I'm under investigation anyway for that kind of stuff. So with that being said, I teach you a repeatable workflow that is 1000% backed by statistics, no live opinions, just pure statistics that can all be pulled from public data. And I absolutely will never, as long as I work for the company I work for now, I will never talk about trade strategies. And I'm sorry. And if you don't like that, you don't have to watch me, right? Because it's not worth me jeopardizing my actual profession. Like, there's plenty of people on YouTube that will give you, trading strategy. There's plenty of, oh yeah, I'll share my screen when I get there. There's good call. Thank you, Michael. There's plenty of people that will teach you a trading strategy. I don't do that. Like, the biggest thing I'll tell you is don't strategy hop, find a trading strategy, back test it, build a risk profile from it, and position it in a way where you can take advantage of the fact that NASDAQ goes up and to the right over the years, right? And you can sustain periods like this and periods like this. And we also know that even though the NASDAQ goes up and to the right, if you build a statistical back test to see how the RTH moves, you'll realize that it moves. Let's go to that chart real quick. And this is all statistic-based trading. Let's turn that one off. Put this one on. So if this is a test I'm got some people doing, right? So the task would be determine how many RTH sessions from 930 to 1600 have a DNP, a trend day, versus a DWP, a directional with pullbacks versus a range trade day, right? And if you do this kind of test for years and years and years, hopefully your eyes are open to how the markets trade during the RTH from a statistical standpoint only, right? Condition using the hourly box, 930 is a constant variable, aka the mean. And from 930 to 1600, use the below definitions to categorize the type of day each RTH displays as, right? So a range would be defined as pushing away from the 930 and returning to it after 12 o'clock, or we test at 930 4 of the 8 hours in the RTH. That would be a range. DWP, directional with pullback, happens when the market moves away from the 930 and doesn't come back to it. There are hours that go towards the direction at 930, which I'll explain what that looks like. So if we look at yesterday, let's put it on the 930. So this is the 930 price from the 1 minute high to low. We can see that 1, 2, these boxes represent the hours. Right, we can see 1, 2, 3, 4, 5, 6 hours tested at 930 price. We can see that this is a range in market, right? This would be categorized as a range. Now, if we go to this day, right, we can see that we moved away from the 930 price, but then these hours start taking out the previous hour highs, which are going back towards the direction of the 930. So this would be considered a DWP. This would be a DWP, a directional with pullbacks. This would be a range. I'm trying to find one. DWP, range, range. So this is a good example of the second definition of a range, right? So we can see that we pushed away for 3 hours and we returned by 12 back to that 930 price. So that's the second definition of a range. This is a better definition. So if we read this, what defines a range? A range is defined by pushing away from the 930 and returning to it after 12, or we test it for 4 or more hours, right? So we've seen the ones where, let me rewind so you can see where the 930 is, right? So this one didn't touch 4 or more hours, but it did the other part of what it makes it categorized as a range, right? After 12, we come back to it. So we pull away from the 930, and then around the 1300 hour, we come back and touch it, right? Doing a complete reversion to the mean, right? So that's why I'll tell you right now that, like, I won't tell you trading strategies because number one is against, I can't, right? I just simply can't. But I can teach you how to follow a repeatable workflow system using pure statistics that are public data and, you know, like, is objective, right? And it's data that you guys all can personally pull from any data provider that's open to the public. So starting off with our workflow process. So, oh my God, I just did that whole damn thing without sharing my screen. All right. Michael even told me. Michael even said, "Hey, bud, share your screen." I said, "I will." And then I went there and talked. All right, my bad. Oh my God. All right, so, all right, so listen, this is what I just talked about. Screenshot this right now, the rule base. So sorry. All right, I was really getting after it too. All right, and then we're going to talk through this at the end. All right, I got to get moving and grooving. We're going to come back to this, and I'm going to start talking about this the next couple of days. I'm sorry. All right, starting with our workflow process. Right, we're above NFP Friday, and now we have a new month, previous month 50% right here. We're seeing when price does this monthly slowdown, right, can this previous month 50% netted, right? As in, if I kicked a soccer ball in a net, how far back would it drop before it bounces out of the net, right? So because we're above previous month 50% NFP Friday, we're looking for lows of the days between 5 and 11 a.m. And it's safe to assume that we can, I can't even say that anymore. We're looking for the lows of the days between 5 and 11 a.m. All right, moving to the weekly chart. We can see that last week we moved between the 2.5 and 5. We at 3.71. You can expect a monthly slowdown now. So there's two definitions. There's three types of pullbacks that you're going to see on the NASDAQ. You're going to have monthly slowdowns, you have quarterly slowdowns, and you have yearly slowdowns, right? How we define that, let's start all the way over here, right, is you can see first trading week of the month, second trading week of the month, third week trading week of the month, we get between 2.5 and 5%. And then the fourth trading week of the month, and the first slows down, maintaining the constant variable, aka this 5 EMA, right? And then first trading week of the month, second trading week of the month, third trading week of the month, we get between 2.5 and 5%. We expect a monthly slowdown. Boom, happens right here. Same thing here. First trading week of the month, NFP Friday, second, third, we extend between 2.5 and 5%. We expect a monthly slowdown. 1, 2, 3, 4. We get extended. Nope, I don't want to clone that one. I want to clone this one. Right? And then right here, we third trading week of the month, we get between the 2.5, we slow completely down. This is telling us that the trend is just completely slowing down, right? And to start anticipating for a quarterly slowdown, right? And that happens here. And when we get the quarterly slowdown, I'll go back to the daily chart and explain to you what this looks like. All we're doing is seeing how markets respond at the quarterly lows, right? So this is March. You can see right here, like on the daily chart, previous month 50%, NFP Friday, we get daily closes above both. We expect to end the month higher. We can't come back on this month and take out previous month 50%. We get above NFP Friday. We expect to end the month higher. My stuff is off. No, it's not. Okay, cool. Previous month 50%. Can't get to it. We close above NFP Friday. We expect the month to close higher. And then right here, we start closing below previous month 50%. NFP Friday, we look for quarterly lows. And then we go into the seasonality pullback right here and wipe out quarterly lows. That's a buying opportunity for every pricing algo there is because quarterly lows, right? This month, we start a bullish trend again. We get above previous month 50%. NFP Friday, daily closes above it. We expect the month to end higher, right? Same thing here. Previous month 50%, NFP Friday, daily close above it. We expect to end the month higher. Can't close below previous month 50%, get above NFP Friday. We expect to end the month higher. Starting this previous month 50%, can't get below it. Close outside of NFP, but we keep swiping in. Now the market's giving us a hand to start anticipating a slowdown. We're not going to predict when that slowdown is going to happen. We're not going to try to do any of that. We're going to wait for it to get below NFP Friday and previous month 50%. Next month, can't get below NFP Friday right here. Can't get below previous month 50%, get above NFP Friday, but we keep swiping into it, telling us to continue to anticipate for that quarterly pullback, right? This month right here, we get below, daily closes below previous month 50%, daily closes below NFP Friday. We instantly look to the left, where's quarterly lows at? We see how price responds there. New month starts. Can we get above previous month 50%? We can. Can we get above NFP Friday? We can. Expect to end the month higher. Same here. Can't get a daily close below NFP Friday? Get above NFP. We expect to close the month higher. Boom. This one, we get below NFP Friday. Now we're looking at previous month 50%. We expect quarterly lows right here, right? This one, we can't get during this period of time, we can't get above previous month 50%, even though we're above NFP Friday. So what do we look for? We look for the highs of the days, lows of the days. We use less risk until the market becomes clear. This month, we got above, daily closes above previous month 50% NFP Friday. So since September 11th, we've been in a bullish trend, right? And so now we use the weekly charts, right, to measure the variance between the monthly close and that 5 EMA being the constant variable, right? Because like I've always said, like if you understand, you know, how the market, you don't need these fancy systems, you don't need these fancy, you know, websites to understand what the market's pricing in. You just need a price range tool, one of these. On the weekly chart, you have a fixed variable, the 5 EMA, right? Third week of the month, we get from that, put the price tool on that 5 EMA and measure. Is it above 2.5 to 5%? If it's the fourth week of the month, we expect slowdowns. And in this case, this is where we got the quarterly pullback. These other ones were monthly pullbacks. This is a quarterly pullback. And then we instantly recover after we take out the quarterly lows. Right here, we move 4.36. So between that 2.5% and 5%, we move, take out the quarterly lows, we instantly recover it. And then we do the same thing all over again. Move 3.5%, fourth trading week of the month, monthly pullback. Get above previous month 50%, NFP Friday, right? Same thing here. We get very extended 5%, fourth trading week of the month, and so forth, and so forth, and so forth. And you'll see, if you listen to the news, from the end of the month, when we had to do these monthly pullbacks or these quarterly pullbacks, it's nothing but doom and gloom, right? But basically, what we're looking at on this step of the process is whatever economic news event, whatever earnings cycle we're in, how is the market pricing it in, and did we get too far extended above or below and we need everything to slow down so the stuff happening behind the scenes can be fixed, broken orders, and just slow down and be managed under control, because you guys see this as a price meter going up and down, up and down, up and down, right? I get to see it, and I've seen it from a unique perspective of what happens behind the curtain, right? This NASDAQ chart represents 42 different economies. Within that economy, it represents every single insurance company, pension fund, public company, you know, money market, all of that, right? Of 42 different economies, right? There's a lot of steps that go through that. There's a lot of companies that their whole job is to provide, has something to do with this chart, right? It is done in a way, yes, price moves up and down, right? We get it. But it's done where it can facilitate thousands and thousands and thousands and thousands and thousands and thousands of orders, right? While maintaining thousands of departments who are actual physical human beings doing different steps of the workflow cycle. And that's what makes this step important. All right. So now, going to this chart, we know that the DR traders like to use Tuesdays 9:30 to 10:30 opening price range as the opening of the week. Yeah, I only use the 5 EMA on the weekly chart. Dude, I don't even know what you're talking about. 5-day EMA Suppose on the chart. I'll go back to it. I'll show you exactly what I do. I'm actually get fancy with it if I stop being lazy, and I'm going to put a Z-score on it, which Jerry keeps bugging me about. This is, oh, it's it. Yeah, this is the settings, right? I never come in here. I never touch them. I think this is actually default. I don't really care because as long as I don't change the default, the settings every time I do it, the system, I'm measuring from that, right? All right, so this red box represents that Tuesday 9:30 to 10:30 opening price for the week for the DR traders. This red box represents the Sunday opening price for the ICT based traders. So this is from 6 to 7 o'clock. This is from 9:30 to 10:30. And the whole objective is to be able to glance there and see, right? Did we go below it, put the low of the week in, swipe above it, and stay out of it? And then when Tuesday comes, we'll be able to do the same thing. Yeah. Just asking because I know several reputable traders use the 5-day EMA specifically as a constant variable. Absolutely. Yeah, I won't go into that. Listen, like, it doesn't matter what you guys use as long as you found edge with it and you don't keep changing it, right? Like, that's at some point as traders, we have to get to the thought process. We have an education phase, a testing phase, a risk profile phase, and a compounding phase, right? Most traders fail because they can never get out of the education phase, right? They can't say, hey, guru, teach me. All right, moving to the testing phase. Now I need to prove that what the guru taught me is correct. And then a lot of traders get stuck in the testing phase, right? And they never make it to the build a proper risk profile for every single strategy, specifically for the strategy that you use. And then very few get to the compounding phase where they can go on Twitter, they can talk to their friends about trading, and no matter what their friends tell them, they're like, I don't really, that's cool, bro. Cool story. I'm already in the compounding phase. Why move backwards? Right? I go to the best party in town. Nobody's going to convince me that the way I trade isn't the best party in town. It doesn't make sense for me to show up to your party because it's not the best party in town. And if I show up to your party, the cops get called because the music is too loud. And then, I start back over in the education phase. All right, back to this. All right, so we're not using anything special besides a weekly fixed variable, right? For the IST-based traders, this is 6 to 7 o'clock, 1800 to 1900 open on the Sunday price. For DR traders, it's the Tuesday 9:30 to 10:30. Right? Can we swipe below one? And later in the week, we'll be able to get more clarity to see if this is actually the low of the week. Well, we've already seen, and this is what we were going over yesterday, that if we put this premium kill zone and pivots on, we have the ability to look, and this is a free tool. Let's do 52 weeks. All right, we can see over the last, let me go to that hourly. So we can see ignore the Monte Carlos that you see here. That's the noise. I want you to focus your attention on this table right here. So we can see over the last 52 weeks that the low of the week happened 23% of the time on a Monday and 23% of the time, 25% of the time on a Thursday. We can see that the high of the week happened 37% of the time on a Friday. Right? So now let's narrow this down into our quarter that we're currently at. Do 16 weeks, a little bit over a quarter. And we can see that in this quarter, 31% of the time, the low of the week happened on a Monday. 38% of the time, it happened on a Friday. So if we think that the low of the day was yesterday, right, on a Monday, where we swipe below the Sunday opening price to swipe back above and find we stepped above it and found footing on it, right? If we do that, and if we want to say that Monday, put the low of the week in, just click right here, put Monday. Yeah, I can't do all these lines. Actually, before we do that, let's put the vet on, and let's set this up for the standard deviations being on Sunday from 1800 to 1900 from where that red line is. And we're going to see, we can see that it came down and hit the one standard deviation yesterday. Right, so now we need to see all these little risk profile, these Monte Carloses that hit that one and got up and left. Right, so now we're going to go, I'm going to put this back on 5. All right, and we can see that one of them, so let's see, this pink one right here, damn it, let me put the dates on so I can see which ones I'm talking about. Show date label. How come I can't see the date label? Oh, okay. So this pink one right there, which is bright Barbie pink right here, this one that happened February 4th, 2024, that's the one that's met the criteria of coming down and touching this one standard deviation and going up. This orange one right here came down and made the low of the week, but touched the 5 standard deviation and then made its way up the rest of the week. That happened March 7th, 2021. All right. Hey, thanks, Jay. All right. I forgot what fucking part it is. Okay, so that's, yeah, let's get back to focusing because I totally got sidetracked. So, yeah, we were talking about the low of the week. So, going back to this chart, sorry about that. Right now, we're trying to understand, was the low of the week put out on this chart? Was the low of the week put in on Monday? Well, now we're about to go into our daily statistics to figure out where the highest probability 9:30 to 10:30 is going to be in relationship to this Sunday 18 to 1900 hour and previous Tuesday's 9:30 to 10:30 hour. All right, so now we've done the NQ in relationship to NFP Friday previous month 50%. We saw that we were in the last trading week of the month and that we pray it's time for the markets to slow down a little bit. And now we're going to put our highest probable trade on the charts, right? So we have, first step for this is we look at market clues, right? Going back to the 15-minute, right? And in relationship to previous day, we can see that we've already taken out previous day's high, so momentum is up, and that we can't go to previous day midpoint, which is right around here. We're rejecting from it, right? So that's telling us momentum is up, right? So now we're going to put our 3 times on, our 3 time probabilities, which would be midnight, settlement, which is 16:15, and Globex open, which is 1800, right? So all the stuff I'm using should be a free code. So 1800 from 8 to 12, and that is where our Globex open is. Now we're going to put in our settlement. Now we're going to put our midnight snap on, our midnight price. All right, you can tell me the next step of the process. Generate market clues. Previous day high can't get below. We're not below the previous day midpoint. Put the time-based probabilities on. What's the next step? Shoot. All right. You might remember we just started doing it last week. Next step of the process is to figure out the statistical RTH gap. Right? So now what we're going to do is we're going to take a fib from settlement and go to where price currently is at. We're going to mark out the 25, the 50, and the 75 because we're going to be pulling the probabilities for that. We're going to come over here and switch our charts to regular trading hours, right? And now we're going to put the midnight snap back on, right? You don't have to worry about putting the times in because that doesn't matter. This factors in the whole day. We're going to start with 75%, right? And we're going to let it calculate. Today's Tuesday. So right in here, we can see out of the last 53 out of 98, it had a gap fill, and 54% of it filled the 75%. So we're going to put 54% right here by this green line because we're above settlement. So we know 75% is going to be actually the red line. Sorry. It's 5 o'clock in the morning. Give me some grace. Now we're going to change it to 50%. We can see right here that it's 59% on a Tuesday to fill 50% of that gap, whatever we open up in relationship to yesterday's settlement price. And then we're going to do 25%. And now this will change between now and 9:30, so we're going to have to move the fib up and down based off of where between now and 9:30 goes, but the probabilities ourselves do not change. So 25% has a 65% probability. All right. And you can see that Tuesday is the second worst day of the month for filling gaps or even caring about gaps. All right. Going back to electronic trading hours. All right. So far we've looked for generated market clues from the overnight session, taking out previous day's highs, not being able to get back below previous day 50%. We put our time-based probabilities on, midnight, settlement, Globex, and we put our RTH gap on. Now we're going to do our structure-based probabilities. All right, so this box represents the last 12 hours, 1800 to 06. The highest high and the lowest low, they have a probability that we care about. So this highest high on the 15-minute chart was at 2145. 2145 has an 82% probability. And remember, the VET is a free statistical indicator that you just have to type in the VET and boom, you got it, right? Use it. Like I built that for you guys to use for free, just like Austin built the Midnight Snap for you guys to use for free. All right, 2145 has an 82. And we're going to put structure 2 in, which was at 1815. 1815 has an 87% probability of being returned to you, and this is using 2,000 days worth of data. All right. So now we've done generated market clues. Momentum's up for the day. We took out previous day's highs, can't go back to the midpoint. We put our time-based probabilities on, midnight settlement, Globex open. We put our RTH probabilities on, and we put our structure-based probabilities on. Now we're going to put our projection-based probabilities on. So based off of what Asia and London has done, and this is the data where you either need to collect it yourself, wait for me in 2 degrees to build something that goes on your trading view charts, or me in TFO, or you can pay for DR's data, which gives you it just fine, right? I'm not going to share my database with it, even though I collected it, but because it's so synchronized with DRs, like it would be unethical for me to share that just openly to the public. So this is the part where those are your 3 options of figuring out how to get this probabilities. And it's going to be a while before me and 2 degrees finish the probability table, because I'm going back and pulling the data for every single 5-minute, 15-minute, 10-minute retracement and extension to figure out, do I want to use these specific kill zones, and does it make sense from a statistical standpoint to use the 1930 and the 2030, where ICT says from the 1800 to the 02? Like, I want to prove to myself that that is the highest probability, statistically sound time to do that. All right, let's see. What do you guys say, Costa? Done with the call. Quick coffee break, and then I just went live. Cool. All right. So now we can see, right now you can use this ICT one set up for life by MK. It's free. And right now I use the 1930 to 2030. And what does price do after that, right? Just like here in London, I use 3 to 4. And what does price do after that, right? Put in my database, and it will give me projections. We have 2 scenarios right now. What are the 2 if-then statements that can happen between here and 9:30, right? Price can go above this high or below this low, right? It's not showing its hand yet. So right now, let's write out the scenarios. Scenario 1 is that price breaches the London high, then from 9:30 to 10:30. What are the probabilities of it being above London low, probabilities of it engulfing London, or being below London highs? Scenario 2, and this is the part that's a little bit more complex, but it's live, because we're taking what Asia's done, what London's done, and since London's live and it really hasn't shown its hand in relationship to this 3 to 4 o'clock range, these are the 2 scenarios. The 2 scenarios can be different. If London's up here in relationship to this 3 to 4, then the scenario will shift to, can we take out the midpoint? And then I'll look for the probabilities of that midpoint. You know, scenario 2 is that this is a pretty cut and dry day, though, that price breaches the London low. Let's see, somebody just joined. Costa. Hey, buddy.
Hey, sorry about this morning.
Hopefully you're doing good.
All sorted now, though. How can I help?
I'm just on the variables and the projection-based probabilities.
Okay, I'll get them organized.
And I'm just writing out the scenarios right now today, because this is going to be a rare day, because usually all I care about when looking at my probabilities is, do we go long and do we stay long in Asia? Do we go long? Do we stay long in London? But because London engulfed both sides of Asia, we're going to actually incorporate that into our probabilities today. So if London ever contracts inside of Asia, which I don't think it probably has happened, I haven't seen it, or if it engulfs it, those are the two times that we'll put those what London has done into our probabilities.
Gotcha.
Above, London, low, engulfs, London, and then below London, highs. And then what's the probability from 10:30 on?
Yeah.
All right. So right now we need a scenario that says London goes long and then the other scenario, London goes short.
Okay, I think I've caught up. So I've London long on a range X with Asia long true. Oh, we had a break as well, didn't we, of Asia?
Yeah, so it broke at 3. And
Yeah.
it broke at, so you should have ADR mid broken at 3 to 9 and ADR mid broken between 2 and 3.
2 and 3, 3 and 9. Gotcha.
Okay, so if it's scenario 1 where we breach London highs and stays trues, what is the probabilities for above London low for 9:30 and 10:30?
Above London low. Yeah, so I'm just adding them up. 54% above London.
Okay. In golf?
In Gulf is 29%.
Below London?
18.
10:30 on?
10:30 on is long, 54.
All right, set it up for breaching London's low.
Breaching London's low. So that means London would be false.
Nope, just short because we haven't broken out of the London range yet.
Oh, I thought we just, okay, yeah, fair comment. Yeah, short.
Actually, you know what? Give it 5 minutes.
Yeah, we're almost there, right?
Yeah, go on and put false.
Yeah, okay, so did he swore there, Maggie? So false long. If we get that, and then I have the wow, it's interesting. If we have that, it's range X is the dominant.
Okay, which one is that?
36.
Probably.
36.
Okay, and what's above London low?
15. 27.
And what's below London high?
35.
And what's 10:30 on?
Long. 62.
Okay, and then so now we're going to put our midline on. Our OU line, our decision-making line. We know that this is the London mid right here by settlement, and this is going to, yeah, that's Costa. So now we're going to make decisions because if we cross over this London OU, which is the midline of the 3 to 4, we know that that is the alert that we're going to come take out this low. And this low is a confirmation that all these probabilities will shift. So now we're going to put our projection-based probabilities on. Right. First thing we look at, weekly range, average 8-week range is 936. We're currently at 29% of that. We've moved 275. Average 10-day range is 289. We've moved 41% so far overnight for a total of 118. Right. So now, all right, take the true false off of the London and leave everything else the same and let's start putting the probabilities on the chart. I need
true and false removed. I'm
1 minute. I
leaving
need to fix this. This should be Monday, 1930, 2030. I need -1, and then let me write it out. Let me get my lines ready.
Yeah, so I've removed ADR mid broken 3 a.m. to 9:30 because we had that already, and it's just long or long
Yep.
true.
No true, false. Right?
No true or false. Okay,
Good.
for no true or false, daily positive one is 95.
Oh, can you give me the -1 real quick?
Oh, sorry, 71, 71%.
All right, and then -2.5.
53.
And then -5.
31.
All right, and now let's start working to the upside.
Yeah. 9.
I only need +5.
Yeah. 55%.
55%. And then +8.
35. 35.
We can see that +5 and +8 don't fall within the daily range. -8 doesn't fall within the daily range. All of them fall within the weekly range. What does that mean? All right, so if we look at this, right, if we know our average 10-day range is 289, we put our distros on for the daily range. We're sinking in with this 71% of the downside. That absolutely does fall within it. Stupid code.
Mine's not showing.
Oh, because he's got it calculated. This is why I don't know how this is calculated. But yeah, I'm saying that. All right, so let's talk about that real quick. So if we know that the average 10-day range
Damn it.
is 289, right? We see that we have an 87% probability of taking out structure stat 1, a 71% probability of taking out 20,199, right? And then a 53% probability of taking out 2,153, right? It's safe to assume that we will, and then we know that we're above midnight right now, we're above settlement, we're above Globex Open, right? There's a probability that says that we can come back down and here to a minimum. It doesn't mean we have to go take out previous day's lows or anything like that. Let me undo that because I moved it. There we go. But we can generally think that the low of the day is still not in, right? Because remember what I told you about lows of the days, highs of the days. What are we looking for?
511. Low of the day between 5 and 11.
5 and 11. But what signature does that usually look like?
Oh, it's destructive. It's demonstrative.
Yeah, it's destructive with instant recovery, right?
Yeah.
None of this looks like destructive with instant recovery, right? Nor did it happen during the proper time of the day. It doesn't mean it can't be the low of the day. It's just not the typical low of the day signature that we look for.
Yeah.
Right? So we got our average 10-day range right here, synced in right below the previous day midpoint. We'll say that is what we're going to anchor it at, because we've seen plenty of responses, and we know statistically that midpoint, previous day midpoint, is an anchoring point for the low of the day when you're in a bullish trend market, right? So now let's put on the rest of the distros. So 4 to 8, Will you run these?
Yeah, my vet is. I just need to reload it.
No worries, I'll do it. And I'm going to be moving to the 5-minute chart, right? Because I don't need 46 Tuesdays 4 to 9. I need 16 weeks worth of that. This quarter's worth, right? And we can see that on Tuesday from 4 to 8 we move 0.52% on average, meaning we still got a long way to go to maintain that for London, which is why I had you run the probabilities in neutral, because London still has not shown his hand whatsoever.
Yeah.
So until it shows his hand, we have to be neutral minded. All right, so now looking at these scenarios, all right, it looks like we're going with scenario 1, and scenario 1 has above London low being 54% with a long at 54% as well. That's crazy. All right.
Yeah.
The 8 to 12 range on a Tuesday over the last 15 has been 1.18%, 18%, right? So we'll put that on our chart.
Yeah.
8 to 12, 1.18. And then we see that longs were the dominant
Yeah.
on both scenarios.
Yeah.
Longs were the dominant. So that tells me that from 12 to 1600, right, we have moved 88% over the last 15 Tuesdays. All right. So now, does this sync with what our average daily range looks like? Which our average daily range is 0.41.
288, is it?
It's 1.14. I need to start putting the percentiles in this daily range so I don't confuse people. 1.41. All right. So if we do the bare minimum, 100% of the average daily range, right? This is the highest probable
Yeah.
view right here. Let's turn off
Yeah.
all the nonsense. All right. Now we have started with generated market clues, and we need to move this up to where price currently is. And I usually put this around the 930 right there. Right there. So we generated market clues, right? And you notice, like, I don't change this part of the process, right? Whatsoever. I do the same repeatable process of putting the highest probable levels on my charts every single day the same exact way. Why? Because the most important thing to do is be a decision maker. Oh shit. All right, we're still good. Turn off some of this. Nope, nope, nope. All right, now we'll click in. All right, so I know that this is my decision making chart, right? It's my decision making chart because I can see all the probabilities clear as day, right? I'm not trading this chart blindly. Everything that I do has a statistical probability to it. So the trades that I take have individual back-tested probabilities. This is just showing me what the market is respecting and what it's not, right? And you guys can do the same exact thing, and you can see what is the market respecting or not, right? And you can start making decisions, because that's the most important part of trading, is being able to make a sound decision with the information that the market's giving you. This is the statistical based part of it, and now you have to somehow incorporate the live price part of it, because live price gets to trump all of it, right? So if you're a discretionary trader, you have your own ways of viewing live price. If you're a mechanical based trader, the live price portion is your mechanical steps criteria is being met, right? I use these 5-9 boxes in the previous hours to identify the market condition and all of that, right? To see what kind of market condition we're in. Like this test that we were doing last night, if I hide it, oh, I'm not going to be able to hide it. Right, this test right here, which we were talking about in the beginning of the show, right? Determine how many RTHs 930 to 1600 have a DMP, a trend day, versus a range day, versus a direction with pullback day, right? I encourage you to screenshot this and go test it yourself for 2 years at minimum, and you're going to see the majority of the RTHs have range style days, right? Based off of this criteria of ranges defined by pushing away from 930 and return to it after 12 o'clock, or we retest at 930 for the 7 hours of the RTH, right? You're going to see that it's overwhelmingly ranges more towards the RTH than it does trend, right? So with that edge that you know, right, you should be able to build mechanical systems. And if you're a discretion-based trader, then, you know, like use the captain's boxes or the arrows to understand, are you in a trending market, or are you in a consolidation range market, or are you in a reversal area? And understand that each one of those market conditions have a risk profile that should be specifically designed to that edge.
Yeah.
All right. With that being said, does anybody have any questions? Because I'm about to jump. Because I got shit to do. Stuff to do. Today is a good day.
Always a good day. Yes, it is. Vaga. Bond trader.
All right. No questions, and I'm out. Have a good one.
Cheers, guys.
Hey, do you have anything regarding your daily statistics, like low of the day, high of the day? How's that project coming?
So I've now got the NQ. Are we live?